Hello everyone, welcome back. It's great to be back here with you. My name is Ed Ponzi. So happy to be here with you today and so happy that we finally hit the third target on Euro US dollar this morning. You know, I was laying in my bed this morning and I kept, picking up my phone and just checking the quotes. I didn't want to get out of bed. It was a nice long holiday weekend, hence we're coming to you a little bit later this week, Monday. Normally we come to you on Monday and Thursday, but Monday was a holiday in the U.S. I was out of town, and so we're getting to you a day late, and that's probably a good thing because now there's more to discuss. If I had spoken to you last night, we couldn't be talking right now about hitting the final target on this trade. If I go to the 5-minute chart, it was kind of funny how when we came down here overnight, you see this low? And that's basically at midnight. And I'm showing here a low of 131.14 and 2 pipettes, 2/10 of a pip. And that did not execute. I did not execute there. Now, people are going to look at that and they're going to say, well, if the price got underneath, touched 131.15 or got under 131.15, then you should have executed exactly at that time. That's not necessarily true. There's a spread, okay? And what is not mentioned here is that it does not say, that whether the bid or the ask price hit that level. Now, if the lower of the two prices, you always see on your screen, you always see two prices, right, whenever you're placing a trade. The lower of those two prices is the bid. You need the higher of those two prices, the ask or offer, to hit that blue line, to hit 131.15 in order to get you fulfilled. So that actually I did not get filled on that one, much to my chagrin. But in the early morning hours, you can see here on the 5-minute chart, it kept creeping down there. And again, it's 131.14.5 is the low. It was not enough to get me executed. And then it finally happens here. It just busts through around 5:30 or so. And now it's been heading back up. So it just came down, got my order, and now it's taken off. And it never did hit 131, interestingly enough. If you go to the daily, right, you're going to show a low of 131.08. So it never hit 131 even, which just goes to show you, right? Sometimes it's good to be above that round number. Now in this case, 131.15 was also a prior support level, and I'm sure all the bulls and bears could read that part of the chart. So it was no surprise that there was a little bit of support there. And maybe we bounced because I look at the euro here and I see some pretty small candles. Of course, remember, this is all holiday time in the U.S., and we're going to see a lot more activity this week as the week goes on, because later this week we're going to hear from the ECB and from the European Central Bank all in one morning. So that alone should create a little bit of excitement. So anyway, congratulations to everyone who played along. Just a quick recap. Why did we short? We shorted when this black line broke. That black line was 135. It was very obvious when the price bounced without touching 135 that there was something going on there. So we actually bought it this time when it didn't hit 135 again. We bought it, made a little bit on the way up. It came back down, but we noticed it was coming back down harder, big red candles. So we did not buy this time. Instead, we waited. This time it broke. We shorted it on the green line at 134.65. Our initial stop was right up here, right above this little area right here was our initial stop. We hit the first target, and we moved the stop to break even. That's the green line. We hit the second target after a long stretch. It really took forever to hit that second target. We entered this trade around July 22nd, July 23rd. We hit the first target within a few days of entry, about a 7:29, so about a week after entry. The second target seemed to take forever, August 20th. And that was really a long, painful stretch. And we saw all these wicks down here. It was a little bit scary. But you know what? Don't overthink it. There's a good lesson in there. Don't overthink it. There was no reason to be scared. We just waited. We were patient. And boom, it comes down, hits the second target. We move our stop down to target 1 when the second target is hit. And finally, we hit the third target. So I hope that's a total of, like, the distance from the entry to the stop. I'm sorry, this is distance from the entry to the third target is 350 pips. Not bad, considering we sat here and laid the whole thing out here in this room step by step, every step of the way. It's not just some clown on the internet saying, hey, I made 350 pips. I'm not bragging about anything. The only people I'm talking to about this really is you. I'm not really trying to impress anyone. You know, but I hope you made money on this, and if not, I hope you made money on something else, because I know that some of you did. Now, I am no longer short the euro. However, I am long the euro against the Swiss franc, and the third entry was hit. 120.50 was hit. So now we have 1, 2, 3, 4, 5, 6 lots out of 10. We won't get the rest, the 4 more lots, until she gets pretty close to 120. And but you'll notice from looking at this, after we got our third entry last week, it popped up a bit, and it popped all the way up to 120.80 yesterday. And you might be wondering why. Well, this came across the Newswire. I'll read it to you. Swiss National Bank's Jordan, he's the head of the Swiss National Bank, so he's the Janet Yellen of Switzerland, so to speak. Swiss National Bank's Jordan pledges to defend cap as global risks increase. This is written on September 1st, and it appears on Bloomberg. Be very sure, ladies and gentlemen, when you read stories on the internet, to check your sources. Okay? Bloomberg is a good source for information. I'll read some excerpts from the article. Swiss National Bank President Thomas Jordan pledged to maintain the cap on the appreciating franc. The franc is still highly valued, Jordan said in an interview published yesterday. Enforcing the rate of 120 per euro is absolutely central to ensure adequate monetary conditions in Switzerland. And he said the Swiss National Bank stands ready to enforce it by buying unlimited foreign currency. So they're willing to buy unlimited euros. Okay, and so on and so forth. He says, he's talking about the risks, about Russian invasion, about the European Central Bank. But bottom line, that he will defend the cap. And I mentioned this probably last week. A survey said that the vast majority of the respondents say that the Swiss National Bank will maintain the cap for at least 2 years. So it's pretty much all there. Okay? And because it's all there, that's why we pop up from below 120.50 up to 120.80. You know, if I show you this on a intraday, you can almost see where his comments occur. Boom. This is where he's speaking, and it gives it back, but not nearly as much. I think we have too many candles on this chart. Hang on a second. Go to a 60-minute. Maybe it's a little bit more obvious. So here we bottom, and look at all the green candles. Boom, 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 and a bunch more, and then we start to give them back. But we're still at 120.70. Okay, so that's a pretty big move actually for this currency pair. That sort of 30 pip move. It's actually big for this pair right now. Anyway, I am long and strong on Euro Swiss. Now let's get to some of your questions, because you guys, you ladies and gentlemen, have been sending in tremendous questions, as always. So let's talk about those. First one, I love to hear this. This comes from one of our friends out there saying, hi, I just made 132 pips on cable using FXED. And wow, I hope he's still short. But do you see, when did we get this email? Gosh, I hope he's still short. Let's take a look. Moving average is going to be exponential, 10-period exponential, and you can see how bounce and bounce, and even here, maybe he gets taken out here with a profit, but man, if he's still short, then he's up way more than 120 here. What the heck is going on with Great Britain, by the way? Why is it plunging like this? Look at that huge red candle there. That's ridiculous, right? Why is it so rough over there right now? Scottish independence. There's a vote coming up in about 2 weeks, a referendum for Scotland to break away from the UK. Scotland makes up not quite 10% of the UK's GDP. So imagine if you owned a business, you were about to lose 10% of that business. That's kind of a big deal. So here's why people are getting excited right now. They take polls just like any country, right? We take political polls to see what people believe is going to happen. And a few weeks ago, the respondents, there was a 16-point edge to people in Scotland who were going to vote to stay in the United Kingdom. So they had a huge lead, about 14 points. 14-point lead 2 weeks ago. Now it's only a 6-point lead. So all of a sudden, there is a charge. The people who don't want to stay in the UK are suddenly on the move. And now there's a real fear for the first time. There's only 53% say stay in the UK, 47% stay against. That's a very, very tight spread for this type of deal. So anything could happen. It's very possible that Scotland votes to leave the UK, which would do serious harm to the UK economy because you'd be chopping off close to 10% of GDP. That's why this thing is getting crushed. And even good news can't seem to help it. I mean, we saw news come out earlier, right, that, where was it? It was a construction PMI. Look at this construction PMI figure early Tuesday morning. Construction PMI looking for 61.4, comes out at 64. Guess what? It doesn't matter. The result, I mean, that's a huge beat. 64 on construction. Did it help? Not a bit. Not a bit. This is not reacting to good news. That usually means something bad is coming. And what could be coming could be, is it possible? Scotland could leave the UK. It's possible. So anyway, congratulations on the trade there, Corey. We love to hear about your success stories, and I know a lot of folks out there have been making money, and it makes me very happy. Here's another question. This regarding the COT report, so I'll pull that up. And the question is, I notice that you only look at the non-commercials, and here's the non-commercials for Japan. When addressing commitment of traders, what about the commercials? Okay, great question. The commercials, why am I worried? Non-commercials are traders. Okay, so I know that these 122,000 short contracts at some point are going to get bought. Those are future buyers. However, I don't know that over here. If we measure the commercials, we don't know if they're ever going to, they're not trying, you see, the commercials are not trying to make money. The commercials are trying to protect themselves. That's all. The commercials are simply trying to protect themselves. So if I'm a farmer, or I don't know, what does Japan export? Let's just say electronics, right? Maybe I have a factory in Japan and I'm exporting electronics to the United States. I need to protect myself against a strong yen. How do I protect myself against a strong yen? I buy the yen futures contract. And that way, if the yen goes up, my business will lose money, but I'll make it back on this, and that's just hedging. So in other words, these guys are just hedgers. The commercial guys are just hedgers. Right? So Toyota, how much you want to bet Toyota is in this pile? 181,000 long contracts. Toyota's profitability swings back and forth with the Japanese yen. When the yen gets stronger, Toyota loses money. When the yen gets weaker, they make money. So always think, when it comes to hedging, think about the thing, what does Toyota fear the most? Toyota fears a strong yen. So how do you combat that? By creating an investment where you will make money if the yen gets strong. Now it's not as big of a problem. So in other words, these folks may never cover these positions. They're just going to hold these contracts until they expire, or roll them. They're just there to protect themselves. These guys and gals over here, these guys and gals are traders. So I know that eventually these 122 are going to be, those 122 short contracts are going to be covered sooner or later. Great question. Okay, what happens when the change goes negative in open commitment, like in the euro? Well, looking down to here, it's not negative completely. You've got a minus sign for the longs, so the longs are slightly shrinking. But the short position in euro is growing. So I wouldn't say at this point that we can say that open interest is shrinking. It's probably still growing a little bit. However, what if you had minus signs in front of both of those numbers? What if the longs and the shorts were beginning to close positions? That's the time when you begin to think, okay, maybe this is about to turn around. Maybe they're starting to close the positions, or the smart money maybe is closing the positions, and others will follow. So that's why we look at it that way. That is a great question. Really good question. Does it mean the shorts are now starting to cover it? That's exactly the way I would view it in terms of the euro and in terms of the yen right now. Very, very good questions. So hopefully that helps your understanding of CFTC, commitment of traders, just a little bit. Here's some more questions about the euro first. So we'll pull that back up. If the euro is in deflation, will it have a stronger currency? A possible bounce from euro USD perhaps? Now that's a very good question. I would say no, that deflation should cause the euro to fall. But how many times have we seen it lately where conventional wisdom just went right down the tubes and conventional wisdom just didn't matter? It's very possible that Europe, the ECB, goes into quantitative easing and the euro gets stronger. Now, nobody thinks that's going to happen, but that's precisely why it could. Nobody thought the dollar was going to get stronger at the end of quantitative easing, but it's done nothing, but that's exactly what's happening. So could the euro get stronger on the beginning of quantitative easing? Anything could happen. Anything could happen. But conventional wisdom would say the euro would fall in deflation. Here's why. You want to stimulate growth if you have deflation. You want to try to kick up growth. That means more quantitative easing. More quantitative easing would lower interest rates, right? More quantitative easing. More. And let me tell you, that should make the euro weaker. That's what everyone believes will happen. But I look at this chart and I say, you know what? It's already fallen about 900 pips since May. So maybe the conventional wisdom will be wrong again. Conventional wisdom said that if that U.S. bonds will fall if QE ends. The end of QE is announced here. Bonds did nothing but get stronger. So who knows? I mean, we live in what I call, it's a funhouse mirror market, right, where everything's distorted right now because of all this government intervention and central bank intervention. It becomes harder to predict, and that's why the technicals become even more important. So yes, it is possible that Euro USD could bounce on deflation. If the Euro Yen, on the other hand, is approaching its 2014 low, and there you see I've got a nice line drawn there at 136. My strategy is to short if it breaks 136.16. Will the euro deflation have any effect on my setup? Will they dump the safe haven currency and buy the euro instead? Well, the yen is having it's getting its butt kicked since so far this month. It's almost as if they were waiting for September to start selling yen. The yen is really doing very, very poorly right now. You can look at this against the dollar. It's above 105. You've got flagpole, bull flag pattern, kaboom, off it goes, and you're at your highest point for the year, well, highest point since January anyway, on dollar yen. So right now, I mean, euro yen could be a very interesting trade if it gets beneath 136. You said 136.16. It's apples and oranges. It's, we're both basically looking at the same thing. I think this could become a very interesting trade underneath 136. However, right now, it's weakness against weakness. The euro's been weak, the yen's been weak, so I don't find it that compelling. I think it makes sense, but you know me, I'm really only taking the trades that are the most compelling to me. Third question, I missed the opportunity to sell cable when it broke 167, hoping for a pullback to 167 or 166.50. What are your thoughts? Well, we just really covered that basically. I mean, there's your 10-day exponential moving average, 165.64. That's probably where I'd short it if I were, if you're not already in there. Okay, I'm not in there, but that's probably where I'd be looking. That looks like an interesting area to short. Let's continue. Lots of questions this week. Automation. I have automated all your strategies to keep my emotions out of the trade. I sent an email so you get a feel for the Ukraine invasion. Thank you for this. This was very nice of you, and it's very sad. The programmer, the person who's programming the strategies is in the Ukraine, and we're in Ukraine. It's not the Ukraine. Is in Ukraine and then definitely going through a difficult time. And so, hey, our thoughts are with them. It's horrible what's happening out there, and it just seems like at this point, no one seems to have a strategy to stop it. A lot of that going around. Okay, please help me understand if it's really just, if the stock market undergoes a huge correction, money should flow to the Swiss franc, yen, and the dollar. Can the Swiss have a problem weakening the Swiss franc? Because we are in uncharted territory. What's your best instinct? As I said, my instinct, I got my money where my mouth is. I am long Euro Swiss, and I am not budging. And I basically gave my thoughts on that earlier, so I think that pretty much covers it. Okay, I am long the euro against the Swiss franc, and that is completely separate as far as, listen, that doesn't mean I like the euro. I just like it against the Swiss franc. It's a unique situation. It's a unique situation that the Swiss have engaged in here. From CNBC, two experts think we could see a 60% correction. What do you think? The Fed's low interest rates could bring a scary 50-60% market correction, says Abigail Doolittle. I don't know Abigail. I do know that she's not a CMT. I am a CMT. And I'll tell you this, she could be right, but I think she might be right. I don't really know. But there was another guy on today saying the S&P is going to 2,400, and someone else said it was going to 3,000. So, for every bull there's a bear. So I mean, if this goes to 3,000, that's a 50% increase from here to 3,000. After it's already tripled, now it's going to go up another 50%. It all sounds like madness to me, but I'll tell you what, if it is going to take a 50-60% drop, we'll get plenty of warning. Now, the way I view this chart right now, I don't see that happening right now. Those are very, very big calls, both on the bull side and the bear side. I don't see any reason to make calls that big because, you know, like right now, we're still in a holding pattern on the stocks because look at all these little tiny candles. They're all little small-bodied candles, which usually means, okay, what does a small body mean technically speaking? It means the open and the close are very close to each other. So if that's the case, that means there's very little commitment on the part of buyers or sellers. Okay, very little commitment. So because of that, I don't see any reason to get longer or shorter at this level. I will tell you this though. If I wanted to make a bear case, you know what I'd show you? I'd show you this chart here at CL. This is oil. Look at the day that oil had. Lower highs, lower lows, all over the place. Oil looks like we're going into a recession. Okay, gold, I'm out of gold by the way. Gold got slammed today too, so commodities, oil and gold, just getting destroyed. Oil and gold acting like oil acting like we're going into a recession, gold acting like we're going into deflation. Wow. How about that? All right, so that's how, if I wanted to make a case for saying that stock market's in trouble, I'd show you those two charts. Especially that oil. That oil chart is absolutely scary. Why? What does oil tell you? When oil prices are falling, that's good, right? And it could be supply issues. But the truth is, when the economies of the world slow down, they don't need as much oil. You know, you don't have to heat the factory because you don't have as many people in it, and you don't, you don't have as many people driving to work because not as many people have jobs. So if you look at it that way, I mean, it could be, you know, this chart, this one looks pretty scary to me in terms of in terms of the global environment. Last question here is more of a statement. I have to tell you, you're such an honest person related to dollar CAD. Now, if you were here last week for dollar CAD, everyone was giving me kudos saying, hey, great call. But the truth is my entry just wasn't quite hit. And, you know, the thing plunged 150 pips in 2 days, but I missed it. Just by 4 pips, I missed my entry. And so our friend says, hey, you're very honest. This is who you are. I think it's the rule, not the exception. The truth is, like, listen, gang, he says a lot of nice things. I'm not going to read them all to you. I'll just say this. Listen, everything we talk about here in this room, it's not hypothetical, you know. It would have been very easy for me to pretend that I gotten filled there, but why make stuff up when real life is so compelling? I don't have to make you guys believe that I win every trade. In fact, I'd rather you understand that I don't win every trade, or sometimes I do miss the entry, because I'm not that different from you. Okay, I started out just like you, and you know, I started out the same way everyone starts out. I started out knowing nothing, and the same things that you encounter. You know, my life is not perfect, and sometimes I miss the entry, and sometimes my stop gets hit, and we're all seeing it all happen, all unfold before our eyes. I wouldn't have it any other way. Okay. Now let's talk. We have just a few minutes left. We're going to talk stocks. So we are still 3 stocks long, 3 stocks short. I closed 2 trades. Remember the Mickey D's? I said buy Mickey D's and short Burger King. I could tell right off this wasn't working out. This did not even break support yet, but it really looks like it wants to break support. It came down today. And there was a rough article in Barron's over the weekend on McDonald's. So I said, you know what? Maybe it was a good plan, but it's just not happening right now. And as far as Burger King, BKW, this is the one I wanted to short. It turned around and popped back up. I said, you know what? This trade's going all wrong right from the start. Let's get the heck out of it now so we don't have to sit here and worry about it. So we are done with McDonald's and Burger King. Seemed like a good idea at the time. We held that position for a very short time, less than a week. When it's not happening, it's just not happening. Now, Lulu is still pretty good to us, getting close back down to 40. Stock market's hitting all-time highs. This thing's not really done too much. TJ Maxx went up a bunch, and I guess we've got to get rid of the TJ Maxx or maybe replace it with a different short. This one just didn't work out, and part of the reason why is because they have very little exposure to Europe, which people are more worried about Europe than they are the U.S. So that's one of our shorts that's not doing that well. But we are still short the Lulu, and we're still very happy with that. And so let's talk about some longs. Apple continues to just be a rock star for us. Another all-time high. iPhone 6 probably comes out next week, and they're going to talk about the wearable device next week on September 9th, so we'll fill you in on that. But aren't you glad we own that stock? We're up nearly 30%. JCPenney, we were up 30%, but it pulled back a bit. We're still up something like 25% on this, though. So we bought it at $8.60, so we're still pretty darn happy with our JCPenney. But today was a little bit of a rough ride for JCPenney, absolutely. Okay, so we're still hanging in there. We're letting our winners run. Apple and JCPenney in particular. Dean Foods is not a winner for us. But it's not really hurting us. So we're just kind of sitting here, 16 bucks on Dean Foods. Again, this is a stock that I think one day you're going to come in and it's going to be 20-something because it'll get bought out. It would make sense. Okay, gang, and that's going to wrap it up. Thank you so much for all the kind comments. Thank you for all the questions. Thank you for your participation. And I will be back with you again probably in just a few days, just 2 days. We got this one out a day late, so we'll probably be back in just 2 days. And next time we get together, we can talk about the European Central Bank and all the other action that's going to happen between now and then. So everybody have a fantastic week, and I'll speak to you again in just a few days. Take care.